Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 340 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today we are going to talk about financial advisors and their opinions about investing their clients in cryptocurrencies. And I think this is really interesting. It comes from a CNBC article that I found that some advisors gave their 2 cents. And I think it's really interesting. I think it's interesting to note what advisors are thinking about. And ultimately, I want to give you some tips as to what you should think about if you work with an advisor and they decide to bring up cryptocurrency to you, or if you ask about cryptocurrency and what they ultimately say, because I think there are some no-go answers. I think there are some things that are real big red flags, and I think there are other things that can really point to a thoughtful advisor. So stick around for a discussion of all that and more in today's episode. Before we get started, though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long-form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, look, if there's any topic that has just dominated the landscape of investing and speculating and trading over the last couple years, it is cryptocurrency. And that's just without denial, right? Cryptocurrencies have just dominated the talk. And there's no surprise as to why that is the case, right? We have seen a meteoric rise in the price of some of the major cryptocurrencies. So, if you just look at the past year, and I know we've seen a lot of fluctuation in the past year, but if you just look at the past year of Bitcoin, right? Bitcoin being one of the most famous cryptocurrencies, one of the most commonly cited, the big dog of cryptocurrencies, right? Over the past year, it has increased in value by 235%. All right. But you think the last year is something, back it up 5 years, right? And just take a look. 5 years, we're looking at over 8,000% in the way of returns. Back it up even further. Let's back it up to November of 2015. To now, over 18,000% in returns, right? So the returns on Bitcoin have been outrageous. And you can get into the returns on Ethereum and other cryptocurrencies that have just gone to the moon, quite literally, in their price, right? So naturally, things that are making high returns are going to float to the surface as things that investors are interested in, right? Because what do we want as investors? Why are we investing our money? We're investing it so that we can create some life for ourselves, build some nest egg for ourselves. And the only way that we're going to do that is if we make adequate returns, or abnormally adequate returns, right? So naturally, this is going to be something that comes up to financial advisors, because financial advisors, they're helping clients to manage their money, helping them to manage their wealth. And when you're doing so, and something like this is so hot, clients can naturally ask, hey, what are your thoughts, or why am I not invested in this, or whatever, right? So I want to go through the CNBC article, and it's entitled "Financial Advisors Struggle with Putting Their Clients into Cryptocurrencies." And I think that is a great title, and I think it's something that I'm kind of glad to hear. I'm glad that they are struggling with this idea, because you don't want them to just be super comfortable with something that is not a traditional way to build wealth. So around 5 years ago, financial advisor Michael Bassaro started getting questions from some of his clients about Bitcoin. It was a murmur in the background, he said. And he, by the way, is the number 92 financial advisor on CNBC's 2021 list of top 100 financial advisors in the U.S. These days, though, it's one of the most talked about assets at his company, Bitcoin and cryptocurrency. He said, it's the topic du jour right now. Despite that interest, though, Bassaro hasn't invested any of his clients' money in cryptocurrencies just yet. He worries the space could change too drastically in the near future. Now, I just want to pause. Him being number 92 on the top 100, and he shows his salt, at least to me, immediately there by that statement that, he's saying, I'm not going to invest my client's money into it. I'm afraid it could change too drastically in the near future. So he's conservative in thinking about new investments and new asset classes, which I think is a good thing. Governments like being in control of money, and they're going to do everything they can to keep that control, he said. They could easily issue their own digital dollar, and that would be a monstrous disruptor to these currencies. Another barrier for Basaro is how slow the financial services sector and Wall Street have been to create products that give people exposure to the digital assets. And this is extremely true because if you want to invest directly in Bitcoin or Ethereum or any of the other cryptocurrencies, you're having to do so through these different sites, these apps, the Coinbases, the the Geminis, the BlockFis, all these different things, and that's not sites that advisors are typically going to use. And so advisors would be looking for the traditional ways to invest, but with exposure to Bitcoin and other cryptocurrencies. And that's coming, and we've seen it recently with the Bitcoin Futures ETF, right, being the first of its kind. But that doesn't mean that it's really here yet, right? It hasn't really taken over in the traditional finance space. The industry has clearly had trouble creating a regulated product that is filled with unregulated assets. And I think that's a big part, especially with the SEC. The SEC wants to control things, wants to regulate things, but if these are decentralized, unregulated assets, then creating some regulated product around them will be very, very difficult to do and to keep up with. Now, with the excitement of cryptocurrencies at a fever pitch and the discussion of their future growing more serious, financial advisors find themselves in an awkward and at times vulnerable position. On the one hand, they don't want to simply dismiss the innovation and risk appearing out of touch with the times with their clients while they watch others reap big profits. On the other hand, so many unanswered questions from regulatory to practical ones around even how to buy and hold the coins remain outstanding. As a result, most advisors are sticking to the sidelines. And man, I don't blame them, right? Even being somebody who's done a deep dive into cryptocurrencies and has had some exposure myself, I don't think that it's something advisors need to find their way into, at least for the time being. I've told you before and I'll tell you again, cryptocurrencies and things of that like, if you're investing in NFTs or crypto or whatever, right? It's speculation, right? You are speculating. You don't know if the value of that's going to go up or down. You don't know if the value of gold is going to go up or down, right? It may be what you see as a hedge to your portfolio, but ultimately it's speculation. You are only interested in the price increase. You're not interested in any increase in value because ultimately there is no increase in value. It's just relative to the US dollar, right? That's the only value to be found in something like Bitcoin or other cryptocurrencies. Now, indeed, while more than 80% of financial advisors are being asked about cryptocurrencies, which is a huge number, but it's not super surprising, just 14% of them use or recommend them as of now, according to research done and compiled by the Financial Planning Association. We're certainly getting questions, said Matthew Young, president and CEO of Richard C. Young and Company in Naples, Florida, who came in at number 5 on that financial advisors 100 list. But like Basaro, he's been reluctant to invest his clients' money in the assets. I tell clients I'm not against cryptocurrencies, but I view them as speculation rather than investments. And I think this is a fantastic point to make. Right? It's a fantastic side to be on. All right. Understand that financial advisors are there to help you invest your money. Invest your money, not speculate your money, not gamble your money. Right? They want you to invest your money. And ultimately, I don't know how many advisors will tell you this, but I'm going to tell you this as somebody who has worked in that place, has been an investment advisor representative, and has talked to clients. Investment advisors don't want you to lose money. Right? And they know that cryptocurrencies are a big risk. And they know that putting that into your portfolio, it brings about the likelihood that you could have large losses in your portfolio. And no clients like to see large losses, and they will pin those large losses on your recommendation. And if your recommendation is have some exposure to crypto and you have large losses and then they're mad at it, that's going to come down on you and your assets under management as a financial advisor. So I don't blame them for saying, hey, I'm not going to recommend it or get involved with my clients. That's not super surprising to me that they would make that distinction. But I am glad that they're making that distinction nonetheless, because ultimately there is a risk-reward trade-off here, right? I would posit that most clients that financial advisors have are 40, 45 plus, maybe even 50 plus, right? I would say a lot are 50 plus. And how many 50 plus year olds need to have substantial speculative positions in cryptocurrencies? My answer would be very, very few, right? And that would be those who have risk profiles that are associated with taking that excess risk or having that excess speculation in their portfolios. But other than that, right, this may not be an asset class that any of their major clients need to be involved in, especially with cryptocurrency still being extremely young. We forget that this is still an extremely young asset class. 10 years old? It's so young. And we still know very little about what it is and what its long-term implications are going to be. Right now, it's just something that people trade. It's just something that people are trying to adopt. But ultimately, we don't know what it's going to turn into, even though it could turn into something great. Now, for those who are persistent about wanting exposure, Matthew Young said, I tell them to go and buy it on their own. And again, I think this is a good thing to do, right? If your clients are talking about speculating and they want to speculate, then tell them, hey, you can do this, and even help them, right? You can help them as an advisor and say, hey, you can use Coinbase. You can use BlockFi. Let's find the ones with the lowest fees. Let's find the place that has the most, security of your funds, because that seems to be an issue on a lot of people's minds when it comes to buying crypto, right? And you can help walk them through that, and they can buy it on their own and not through the accounts that they have with you. But at the same time, I mean, we're talking about being very careful about not making, these decisions or giving advice that is, going to damage your business in any type of way. And I think that's something that advisors really have to struggle with. Now, the future of cryptocurrencies is still too uncertain for Matthew Young to feel comfortable adding to them to the portfolios of his clients, most of whom are near or in retirement. So there it is, right? Most of them are near or in retirement. And I don't know what it is. I think we just want returns, right? Because I had clients that were like this as well, right? That were near or in retirement and yet wanted, very risky exposures. And sometimes you had to talk them into like, hey, you don't need these risky exposures, right? But then on the other hand, you have those who initially are willing to take the risky exposures, but then they take these exposures and then go, oh crud, it dropped 5%, right? I want out, right? They can't sleep at night with the exposures that they're in. And I'm sure that's something that people would have to wrestle with putting their clients into cryptocurrencies. But I just know where these advisors are coming from. Now, regulation is not here yet with these cryptos, Matthew Young said. Other advisors have taken small steps into the new space. We have spent most of our energies educating clients on what cryptocurrencies and blockchains are. Mark Mearsberger, CEO of Dana Investment Advisors in Wisconsin, which came in number 1 on the Financial Advisors 100 list. So they're big on education. In time, as the regulation and security of digital assets become more robust, Mearsberger believes that many financial advisors will put them into their clients' portfolios. All right, we see the sector is quickly evolving and offering continued growth. Still, he's wary of claims that the assets will replace more traditional ones like stocks and bonds. I think, this is just my opinion, just candidly, I think that cryptocurrency is not meant to take over traditional investing, right? I don't think that's the case at all. I think people who think that that is what it's for or what it's going to do are naive. I think that it is likely to take the place of something like gold. I think it is taking the place of something like gold, taking a lot of those cash flows away from the, what the gold bugs would typically do, or who would buy other precious metals or commodities, right? I think ultimately it's going to be used as a portfolio hedge, right? I think if you're looking to add this to clients' portfolios, the reason that you're doing so is so you can hedge, not necessarily so you can just make outsized returns. because the thought process here would be this, and I'm not saying that cryptocurrency has moved in this exact way. I'm just saying think about currencies in general, right? There's a fixed amount of Bitcoin out there. There's an unlimited number of dollars out there, right? And as those unlimited number of dollars continue to flow into the economy, there's still going to be a fixed amount of Bitcoin. So regardless, right, as inflation may rise, right, and this is the same idea with gold, but as inflation may rise, then we should see increases in value of cryptocurrencies because, especially Bitcoin, because there is a fixed amount. So just think about this for just a second, right? Just a quick inflation refresher, right? If you're going to the grocery store and you're buying, let's say, milk, right, and milk is consistently costing $2.50 a gallon, right? But then you go to the grocery store and it costs $3.50 a gallon, right? That's not because the supply of milk changed, right, or whatever. It's because the demand changed, and it's because the value of your money went down, right? And it's the same thing with Bitcoin, right? Not saying that Bitcoin and milk are the same. I'm just saying that as the value of your dollar goes down relative to another currency, cryptocurrency in this case, then that will be shown in the amount of dollars that you could exchange for one of whatever it is, right? Or at least that's the thought process. So that's how many would use this as a hedge. They would see this as a currency hedge and an inflation hedge, but maybe not necessarily a way to get rid of stocks and bonds in a portfolio. Now, while this, Mearsberger said, while I think that many industries and companies will see opportunities to benefit from blockchain utilization, I don't see most investors as needing direct exposure to cryptos in the next 10 years, right? And again, I think there's just still this big, risk-reward relationship that has to be taken into account, right? If you're not taking into account risk, especially with these elderly clients, with clients who are in and are really close to retirement, then I think you're missing the boat as an advisor. Now, Ivory Johnson, a certified financial planner and founder of the Delancey Wealth Management Group in Washington, D.C., is more bullish. Right? He got his first questions from his clients about Bitcoin after he invested 5% of their portfolios into the currency in 2020. He got no pushback, he said. They got acclimated pretty quickly, he said, adding that he believes the digital currency will only grow more popular and that his allocations to it will also rise. The emergence of a U.S. government-backed digital currency, he said, would do nothing to impact the value of Bitcoin. Of course, this is his opinion. He said advisors would regret ignoring the coin's ascent. I think we'll look back in 10 years and think the people who didn't buy it were foolish, he said. Advisors are going to have to get on board. I don't agree with said sentiment, okay? That's not to say that it won't continue to go up in value, but that doesn't necessarily mean that it needs to be owned, okay? I think we get so caught up in bullish sentiment, right? We get so caught up in something going up in value that we're like, that's what investing should be. And I don't think that's right? Investing involves risk mitigation, right? And it involves taking a certain amount of risk and getting a certain amount of return on the other end, right? And this is speculation, right? Speculation can lead to huge upside, right? It can lead to huge returns, undoubtedly, right? And yes, there are a lot of people, maybe even including myself, that are going to kick themselves for not being more involved in cryptocurrencies. Maybe so. And there's probably already a lot of individuals who are kicking themselves for not being involved in cryptocurrency when they could have began before. But I don't think that that's what's going to be the focus of advisors over time, right? Even this guy, Ivory Johnson, even he put just 5% of their portfolio into cryptocurrency. Why do you think it was just 5%? Because he doesn't trust to invest their money in it in these large percentages. He did a little 5% speculation in their portfolio, which I don't see a problem with 5% speculation. But again, I think this should meet clients' needs. This shouldn't be just a end-all be-all for everyone. And I don't think that this is going to be the type of deal where we're looking and we're going, if you didn't invest in this, you were dumb. Right? I think there are things that, we can say if you didn't invest in this, then you were dumb. I think if you don't invest in the stock market over the long term, then you're probably missing out on something that is, more historically proven, and that obviously has intrinsic value. I think if you aren't getting some exposure to real estate over a long period of time, then you might be viewed as dumb, because that continues to only go up in value over a long period of time. But 10 years of appreciation in price of a currency, ultimately, and we have to remember that, ultimately that's what this is. It is a currency. There's nothing behind this other than the blockchain technology, right? That is making it anything different, right? It is a currency. It is, some people view it as a store of value, right? And it is something that we can, pay for things with. We can transfer payments with this technology and do so through cryptocurrency. We can buy things with cryptocurrency for sure, right? And that's only going to get more widespread. But then the question becomes, do the returns suffer, right? Because, if it's more widespread, then of course, price will increase because demand has increased, right? But at what point is it stable enough for us to trust making payments with it consistently? Because right now, I would say there's no way that I'm holding that instead of cash or, dollar bills. There's no way, right? And I'm not suggesting that any of you do either. And I don't think any of these advisors are saying that you should. But I think that we ultimately have to be realistic. And the realistic notion here is that even though these advisors are really having to think about this hard and really having to field questions from their clients, most of their clients don't need allocations to this, in my opinion. Right? In my opinion, most of their clients need more traditional allocations, right? And if they want speculation, I liked what one of the earlier guys said. I think it was Matthew Young. Hey, go do it yourself, right? If you want some speculative assets into cryptocurrencies, then go do it yourself. I'll be glad to point you in the right direction, but go do it on your own, because that's not going to be on my return sheet. I think maybe an advisor like this Ivory Johnson guy, I think maybe he does something like this in order to spark interest in the way that he invests his clients' money. I think that could definitely be the case. I think it could also be the case that he's trying to spark up returns, right? And I think this is something that's really important. And I'm going to talk about a few of these things before we get out of here today. I think that we need to pay attention to the way that advisors talk about cryptocurrency. Because if an advisor comes to you and says, you got to be involved in this thing, it's going to blow up, it's going to be huge, it's this and it's that, and they can explain it well, maybe they can't, right? But you need to understand that if there's no skepticism from your advisor, if there's nothing that seems negative about any type of asset that they're pitching to you, then run. Right? Because there's always risk. There's always downside to be taken. And with cryptocurrency, there's plenty of risk. And if they act like there's none, then that's a problem, right? You need to know that there's risk associated. You also need to look at your own portfolio and go relative to, indexed portfolios with similar allocations, right? How am I doing? And if you see that you're underperforming pretty swiftly, I think you should question, why are you trying to add cryptocurrencies to my portfolio? You can't even do well with these traditional investment vehicles. Are you trying to just bump up returns in the short term, right? I just don't know what the big draw is for these advisors. I don't know why they would choose to invest their clients' money, especially a broad array of their clients into cryptocurrencies, unless the clients, distinctly ask. And like I said, I think it's far safer as an advisor to say, hey, go do it on your own. We can talk about what allocation you want to, do that with, how much money you want to do that with. But I'm not going to be responsible for that allocation. I think that's a fair reaction. But I don't think it's a fair reaction to go, hey, let's take all of our clients and put them into cryptocurrencies, because not all of your clients need to be in cryptocurrency. Again, financial advising clients are older. I know this. It is the case. It does not differ greatly from place to place, right? Ultimately, the people who have the most wealth are the older individuals, right? So they're the ones who are working with financial advisors in larger groups, right? And these are individuals who don't necessarily need this type of allocation. Doesn't mean that they won't ask for it, right? But it's likely the fact that they don't need it. They likely don't need this type of risk in their portfolio. And especially if they're trying to live on this nest egg, they likely don't need this risk. Now, I also want to caution you against this as well. Financial advisors who treat this as investing are also ones that you should run away from, because this is not investing, right? Do we have to be reminded of the definition of an investment, right? So if we want to look into the definition of an investment, it is what, right? An investment operation is one that through thorough analysis guarantees what? Guarantees safety of principal and provides an adequate rate of return, right? Can we analyze cryptocurrency? I don't know how. I don't know how we're going to analyze cryptocurrency unless you just have some in. Most of us aren't analyzing it, and most advisors are not going to analyze it either. They just look at price, and just looking at price is not analyzing something, right? Safety of principal. Do you have safety of principal with a cryptocurrency? No, you do not, okay? Now, may it provide an adequate return? It may, right? But it's not providing safety of principal. It's not an investment, okay? There's nothing in the world, and I'm not suggesting that this will occur, but there's nothing in the world that says that Bitcoin won't be worth zero in a month. There's nothing, right? There's nothing that says it should be worth anything. There are no earnings. There is no sales. There's nothing that says that can't be the case. Now, there's plenty pointing to say that won't be the case, but there's nothing that's saying it can't be, okay? And so that's something we need to keep in mind, is that these are speculative assets, and they should be treated as such. Anybody who wants to put a large percentage of your portfolio into a speculative asset, one, doesn't understand what speculation is, and two, is out of touch as an advisor, right? So I think that that's a place where you have to run, right? That's not an advisor that you need to be working with, right? And when I say more than a certain proportion, any advisor that's willing to give you more than 10% of your portfolio for any type of overall speculation, I think that's regardless of where you are in your financial life, regardless of if you're in retirement or you're young or whatever, I think that's just imprudent. I don't think it is wise investing. And I think that as you get older, that speculative portion, depending on the size of your nest egg, of course, should even dwindle, right? You shouldn't be having large percentages, more than 10% in any type of speculative assets, regardless of where you're at. Right. And if they don't understand that, they don't understand and acknowledge, right? Not just understand, but acknowledge to you, yes, this is speculation. Yes, we can put a small portion of this, speculative portion of your allocation into this particular asset, and everything will be okay. Just understand it's going to fluctuate. I'm fine with that answer. That's a good answer, right? But a bad answer is this is only going to go up. A bad answer is this is the best investment we've ever seen. The bad answer is that this is an investment at all, right? A bad answer is that I've done the analysis. Those aren't true, okay? And those aren't advisors that you should be working with. I'm not saying that this guy mentioned in the article is a bad advisor. It's not what I'm saying, because I think a lot of the things that he's saying as far as like the percentage he put in, that doesn't want to miss out for some of his clients, is trying to work well for his clients. He didn't get a lot of backlash. I think those are great things, right? That's fine. And some people are just more bullish on certain assets than others, so I can't knock him for that. But I think as an advisor, you also have to know the not just the wants of your clients of having higher returns, but the needs of your clients to preserve capital, to create income for themselves over time. And for some people, cryptocurrency may be perfectly fine, but I think for a lot of them, they just need to steer clear. So again, very interesting article. I think financial advisors are going to play a big role as we move forward in allocating people's money into cryptocurrency or not. So I think it'll be interesting to see if their viewpoints change in the next few years, or if their viewpoints change as the price changes, right? If it just falls off the face of the earth, then my guess is that the adoption will be far slower. If it continues to blow up in price in the way that it has, then we might see adoption in a far speedier way, right? And that's not necessarily the correct thing that should occur, but again, people run after returns. Clients run after returns, and advisors ultimately don't want to be behind the pack. But I I'll just cut it off there. I think that financial advisors are going to play a large role, and they should struggle with this thought process as they should with any investment vehicle or any type of speculative asset that their client talks about. They should struggle with those decisions, and they should just try their best to be a fiduciary and work for the client at all times. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. So tune in Monday as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.